So hello, it's good to see everybody. Welcome to today's session, which is titled Reporting Business Activity for SSDI and Medicare. As I mentioned, my name is Molly Sullivan, and I am with an organization called Griffin-Hammis Associates, which we call GHA for short. GHA is an organization that's been providing training and technical support for over 30 years to organizations that support people with disabilities, really across the spectrum of disabilities, to become self-employed and small business owners. So for this webinar, I am joined by my incredible colleague, Sierra Ladroma. Sierra is going to be monitoring the chat box throughout the webinar. And actually, on that note, if you haven't already opened the chat box, please do. You can do that by clicking on the chat icon at the bottom of your Zoom your Zoom window, which is your Zoom control panel. And then please use the chat to ask questions, share ideas, leave comments, just engage with us. We'd love to hear from you and want to make sure we address what you've come to learn. So we'll stop, as I mentioned, for Q&A at some kind of key points. And I already mentioned, please pop your questions in the chat box, and then I'll tackle those at kind of key points. Lastly, we want to thank the U.S. Small Business Administration and the National Disability Institute in leading this Community Navigator pilot program, which creates a space for this webinar. And I do want to also note that while the webinar is funded by the U.S. Small Business Administration, all the opinions and conclusions, all the recommendations that we express here are those of ours and don't necessarily reflect the views of the SBA. At the end of the webinar, we are going to share information with you about some upcoming events, and the National Disability Institute team will share information with you about resources that they have on their Small Business Hub website. Okay, so that's it for a welcome. So I'm going to go ahead and move us on and I'll give you a quick little overview of what we have in store for our time together today. So the focus for today's webinar is about reporting self-employment activity for the sake of the SSDI benefit, which stands for Social Security Disability Insurance, and the Medicare that comes along with it. To tackle this topic, what I'm going to do is take just a few minutes to make sure everybody knows what I mean when I say SSDI, and also the Medicare that comes along with it. And then we'll look at what to report, when to report, and how to report self-employment activity. Once we've covered those topics, I'll just touch base about some key tips that we recommend for reporting and managing SSDI when self-employed. So while the agenda looks visually short, there's some pretty big topics embedded throughout there, woven throughout there. So I'm really going to stay focused on sharing information with you about SSDI and, as needed, the Medicare information and reporting around self-employment. What that means is I won't be going into any of the details around supplemental security income, which is the other cash benefit Social Security administers for people who have a disability. Nor will I be going into Medicaid, which is a different type of health insurance. But I do want to take just a minute and share some ways that you can learn more about those benefits, as well as a few of the topics I'm going to be touching on today. I'm going to do my best to answer your questions, but as we go through the content, you're going to find that there are some topics that are really big enough for their very own webinar. And we've actually created a lot of those webinars that are available. So I just want to make you aware of what else is out there. So for starters, I'd like to point out that we have more webinars about benefits and self-employment. This webinar is actually part of a series that we started last year and that we're actually finishing up today. Today is the last webinar in our benefits and self-employment series. Last year, in 2022, we actually ended up doing 5 webinars related to benefits and self-employment. The first one was just a real basic overview of public benefits, explaining, for example, what Social Security disability insurance is, what Medicare is, what supplemental security income is, just sort of laying the foundation for what these different disability benefits are. The second webinar was about common business structures and some of the key considerations in choosing a business structure when you receive a public disability benefit. The third webinar was about Social Security's plan to achieve self-support, which we call PASS for short. And that webinar looked at how PASS can help some people pay for business startup expenses. The fourth webinar was about self-employment resource exclusions, which explained ways to get business assets like bank accounts and equipment excluded from financial need-based benefit programs through some special exclusions like property essential to self-support and ABLE accounts. The fifth webinar was about net earnings from self-employment and how that's calculated. Now, I'm actually going to be touching on that topic today. We're going to do a quick review on that topic. But I want you to know we have an entire webinar about it. So at a certain point during our time together, when I'm talking about net earnings from self-employment, and you think, oh gosh, I wish I could get a little bit more info about this, just know we've got a whole webinar about that topic. Okay, so then in 2023, just briefly, I'll say we've done 3 more webinars around benefits and self-employment. And these are really good, meaty ones. We did one that was about the effect of net earnings from self-employment on SSI. We did one that covered the effect of net earnings from self-employment on SSDI, which is also a topic I'm going to briefly touch on today. And then last month, we did a webinar on reporting self-employment activity for SSI. And then, of course, today we're doing one that's about reporting self-employment for SSDI. For all of those past webinars, you can access them on the Disability Small Business Hub's website. And Sierra, it would be amazing if you could drop a link to that website where those past events are located so people can find recordings if they'd like. Okay, so while it's true that webinars are a great way to build your knowledge, no doubt about it, love that you're here and keep building your knowledge, don't stop doing that. What I would also say is that it can be difficult to take what you learn in a webinar and apply it to your individual situation. And part of that is just that, having worked with public disability benefits for over 20 years, I can say that they're just complicated. And so it can sometimes feel difficult to figure out, what does this rule or what does this tip mean to me? So I want to take just a couple more minutes and just check in about one other kind of resource that I want to make sure you know how to access and use. And that is getting some help, one-on-one help from a benefit planner to help you understand how to report, understand the effects of self-employment work on your specific benefits. So what's a benefit planner? Well, a benefit planner is it's a professional that generally works for a nonprofit organization, potentially a state agency, some kind of an employment agency or an employment program, and specializes in understanding these public disability benefit work rules, like the SSDI work rules and the SSI work rules. Now, benefit planners go by a handful of different names. They have different job titles. You could work with a benefit planner whose job title is a community work incentive coordinator, or whose job title is benefits counselor, or whose job title is work incentive counselor. Regardless of the title, these professionals provide one-on-one counseling for people with disabilities about potential changes to benefits when working, and also information about how to report work to the public benefit agencies. And that includes self-employment work, not just wage employment work. Now, in every state, there's at least one benefit planning program called a Work Incentive Planning and Assistance Program, which we call WIPA for short. You can find the WIPA project in your area by using the Find Help feature on a website, which is choosework.ssa.gov. Or you can find out who your WIPA project is and how to contact them by calling 1-866-968-7842. Or you can use the TTY number, which is 1-866-833-2967. Now, I do want to let you know that in some states, the State Vocational Rehabilitation Agency may also provide some benefits planning services. So if you're supporting someone who is working with the State Vocational Rehabilitation Agency, it'd be great to check in with the VR counselor about the resources that they have available to support with benefits counseling services. Another option is to contact your local Center for Independent Living and ask if they provide help with benefits planning, or if they know of any agencies or organizations that provide help in your area. Some CILs do have benefit planners on staff, but if they don't, they do generally know how to access that kind of service in your area. And there's a link on the slide that goes to the National Directory on Centers for Independent Living. So in summary, what I guess I want to make sure you understand is that that there's a number of ways you can go about continuing to build your knowledge around how to report for SSDI, and you can even reach out for some help from a benefit planner to understand how all these details apply to you and your situation. So as you listen to the information I shared during this webinar, rather than feeling like, oh, I've got to understand every little bit, just take in what you can, grasp some new details you hadn't heard before. And if you are someone who's receiving benefits, make a point of trying to reach out and locate a benefit planner to help you think through your specific situation. Okay, all of that great foundation being said, I'd like to support you in building your knowledge around reporting self-employment activity for SSDI. And to do that, I want to give just a brief review on what SSDI is and what the Medicare is that comes along with it. And the reason that I want to just take a couple minutes to do that is to make sure you're clear what benefit this webinar is about. Social Security administers two different kinds of cash benefits if you experience a disability, and the one we're talking about today is Social Security disability insurance. Just want to make sure we're all on the same page about what that is, and then we'll move on to the details about reporting. All right, well, Social Security disability insurance is called SSDI for short. It is a monthly cash benefit, and it's based on a person's previous work and earnings. And it's administered by Social Security, which is the fact that it's based on previous work and earnings is why it's considered an insurance benefit. Now, there are two basic eligibility rules for SSDI. First, a person must meet Social Security's definition of disability or blindness, one or the other. And for that particular criteria, I think it's helpful to think of SSDI as being a long-term disability insurance benefit. And I say that because the person's disability, to be eligible, the disability must be expected to last 12 months or longer, or it would need to be terminal to be eligible. So that's the first eligibility criteria. The second is to be eligible for SSDI is that the person must have worked and reached what's called insured status. And what that means, sort of a simple level, is that the person must have worked and paid in enough into the Social Security Trust Fund. Since this is not a webinar about SSDI eligibility, I'm going to kind of keep it at that high level, but you can read more about SSDI eligibility if you'd like on a Social Security publication that actually does a nice job of describing some of those details. And that publication is just called Disability Benefits. And so, Sierra, it would be great if you could drop a link to that publication in the chat box for people who are interested in getting a little more familiar with what it means to be eligible for SSDI. Now, once a person is found eligible for the SSDI benefit, the benefit amount itself is going to be based on the person's previous work record, their lifetime earnings. And so as a result of that, the benefit amount varies from one person to another. Someone who's had a shorter or a lower work record may have a SSDI benefit that's $300 a month. And someone who's worked for years and years and years and made a lot of money every year could have a $3,000 SSDI benefit. The maximum SSDI benefit payment this year is it's around $3,600, just to kind of give you a sense of the benefit. So the amount varies from person to person. So the reality with this and really all the other benefits is that the names of them can be kind of confusing. And so it can be a little bit tricky to even get a sense of what benefit you're receiving, or if you're supporting someone, what benefit they're receiving. And that's really just the nature because of these benefit programs being complicated, and some of them, their names sound the same, which is not helpful. So I highly recommend that if you're someone who's going to start working and you're gathering all this knowledge, to make sure you understand what's going to happen to your benefits and to know how to report, that you begin by confirming which benefit you have. And you can confirm the type of benefit a couple of different ways. If you have set up a My Social Security account, you could log in and look at it there. You can also call Social Security and ask them to tell you what type of benefit you receive. Or you could look at a recent letter. Some of the letters will say what benefit type a person has. So that's really the basics of what SSDI is. It's a disability insurance benefit that's based on the fact that a person worked and paid in. Okay, so I just want to briefly check in about what Medicare is. Okay, so Medicare is a financial health insurance program. And Social Security handles the eligibility side of Medicare, but then really everything else falls under the responsibility of the Centers for Medicare and Medicaid Services, CMS. To be eligible for Medicare, a person has to fall into an eligibility group, one of a handful that are available. The eligibility group most people know about is being 65 years of age or older. And that's really the vast majority of people who get Medicare fall under that eligibility group. But for the sake of our time together today, I want you to know about the Medicare eligibility group for people who receive SSDI. So what you might not know, but if you don't, now you do know, if you receive Social Security Disability Insurance, SSDI, it comes with Medicare. Having SSDI is a Medicare eligibility group. Now, you're not able to get the Medicare until you've been entitled to SSDI for 24 months. So there's a waiting period. But once that 24-month waiting period has been met, Medicare will automatically begin. And if a person who's receiving SSDI has the Medicare, if they go to work, there are also some work incentives that allow that person to keep the Medicare, even if the SSDI stops. As long as the person continues to have a disability, they could actually continue to keep that Medicare. So you can actually read a bit more about Medicare and who's eligible for it on another separate Social Security publication that's called just simply Medicare. And so Sierra, if you could drop that one in the chat box, that would be great as well. So if you were not sure if maybe you have this benefit or not, you can also easily find out which one you have, if you have this, by calling the Medicare toll-free number, which is 1-800-Medicare. Or if you have a Medicare account set up, you can log in and confirm that you have it. With all these benefits, it's really helpful to confirm what you have so that as you begin learning about the different rules, you're clear about which benefit program rules you need to learn about. All right, so I'm going to do this. We're going to look at an example of example person who's eligible for SSDI and Medicare. And I'll check in for questions, and then we'll move on to reporting. Okay, so our example person is Jana. And in this scenario, Jana worked for over 10 years, full-time as a cashier. And then when she was around 32 years of age, she was diagnosed with multiple sclerosis, and she had to stop working because of it. And she applied for SSDI and was found eligible. And the SSDI amount that she receives, this scenario person, Jana, receives $1,300 a month of SSDI. So you can see in this example that Jana met the two basic eligibility criteria. She was found to meet Social Security's definition of disability, and that was based on her diagnosis of multiple sclerosis. And the second criteria she met, she had worked for over 10 years, full-time, and paid into the Social Security Trust Fund. So she reached insured status. So because she met those two criteria, she was found eligible for SSDI. Now her SSDI amount, which is $1,300, is based on her past work record, having worked for 10 years full-time. Now the last bullet on the slide tells us that Jana also has Medicare. And you learned that a person who is eligible for SSDI gets Medicare. They just have to serve a 24-month waiting period. And so Jana became eligible for SSDI 3 years ago. So she already served that 24-month waiting period, and so Medicare has started for her. Okay, so hopefully you feel like you have a clear sense of what the SSDI benefit is and that it comes with Medicare. I do want to just pause before I switch us over to reporting for self-employment and see if there are any questions in the chat box just about what is SSDI, who's getting this, what this benefit is. Sierra, any questions in the chat box for me on that one?
Hey there, this is Sierra speaking. Molly, we don't have any questions right now, so I think we're good to keep going.
Perfect. Okay, great. Well, then let's shift and let's dig into what it means to report, what you need to report for the sake of the SSDI benefit when you're self-employed. Okay, so on this slide here, slide 11, what I've got for you is just a brief overview. It's a list of the key things that SSDI beneficiaries who are self-employed should plan to report to Social Security. So I'll give you a quick overview of that list right now, but what I want you to know is that we're going to dig into each one of these in slides coming up next. So let me give you a quick overview. Okay, so when a person receiving SSDI opens their business, they'll need to contact Social Security and just share a brief description of this business and share what they're projecting as their net earnings from self-employment for the first year in business. Now, in regards to when the business opens, generally for Social Security purposes, a business opens when it begins doing the operations that it was set up for. So let's go back to our example of Jana. Let's say that Jana got let's say she just completed school. She got a degree as a graphic designer. And she is, spending a few months doing some planning, kind of getting things in order because she's planning to be a graphic designer in a self-employment way. So she's going to be a self-employed graphic designer. So she takes a few months to do some business planning and to set up a business bank account and a few other startup activities like, getting insurance and such. So she's finally ready to start marketing her services and working with clients. So in that situation, the month that she begins marketing and bringing in new clients is usually often when the business is considered open, because that's really when the self-employment work activity has started. Right? Before that, it wasn't really self-employment work activity. It was just planning and getting ready to open a business. Now, if you or someone you support are feeling a little unsure about when the business is considered open, sort of like when do I need to call and report, you can always just contact Social Security and say, hey, this is what I'm doing. I haven't actually started marketing or offering services or selling products. Or when you have, you would say, and this is when I started offering and marketing services, this is when I think the business opened. And you can just sort of talk through your situation with them if it feels fuzzy at all. Some situations are really clear cut. Some are a little fuzzy, but sort of the general rule of thumb is once you've actually started trying to sell and you're receiving income, that's usually when it's considered the business is open for the sake of benefit purposes. So after making this initial report, to say, hey, this is my business and this is what I'm thinking I'm going to be making. On an ongoing basis, there are some important things that someone who receives SSDI should plan to report to Social Security. The first one is giving a copy of the business tax return once it's filed with the IRS, giving a copy of that to Social Security. Social Security needs that business tax return to confirm how much the person's earnings actually ended up being in the previous year. The second ongoing activity is to complete the Social Security work activity form called the SSA 820 when Social Security sends it. When they want you to fill that out and give them more details, that's an ongoing activity that can happen. And I'm actually going to share a good chunk of information with you about that in a couple of slides. And lastly, it's important to report changes in financial projections. And this is especially important if the person's net earnings from self-employment are going to be either going above the substantial gainful activity level, or they're going to fall below that substantial gainful activity level. I'm going to talk a lot more about that in a few slides as well, but just for your reference, that substantial gainful activity level this year is $1,470 a month, $2,460 for a person who has blindness. Again, I'll dig into more about that in just a little bit. Now, since Social Security manages eligibility for Medicare, the great news is that when you report for the sake of SSDI, you're essentially reporting for the sake of your Medicare eligibility. So you're taking care of both things. If you're someone who's receiving some financial assistance paying for Medicare out-of-pocket expenses like Medicare premiums or coinsurance and deductible out-of-pocket expenses, that is administered, those programs are administered by the state Medicaid agencies. And so those agencies, you would just need to follow whatever their reporting requirements are. I'm afraid we can't tackle that as a part of this particular webinar because it's different in every state. So if you receive any benefits from your state Medicaid agency, it's important when you begin working or you're planning to start working to learn about their reporting requirements as well. If you feel a little unsure how to navigate, how to do that, I would suggest reaching out to a benefit planner. It'd be super helpful for that. Okay, so what I'd like to do is I'm going to hold off on checking in for questions. I want to move us on to our first, dig into our first topic on this overview, which is reporting when the business opens, a description of the business. Okay, so when the business opens, as I mentioned, it's important for someone who's receiving SSDI to report the start of that business to Social Security. And when you report the start of the business, essentially what you're doing is you're giving some basic information about what this business is. So on slide 12, I've got a list of some of the core details, the kinds of things that you just want to be prepared to share. And that includes the name of the business. I'm going to share what that is, and a brief description of what the business does. You know, if for Jana, she would be saying, you know, I'm going to be a self-employed graphic designer. I'm going to be selling my services as a graphic designer. It would also be good to share the business structure. And what I mean by that is the business set up as a sole proprietorship? Is it set up as a partnership or a limited liability company or a corporation? And kind of along those same lines, the other thing that Social Security will want to know is if there are any co-owners in the business and if you share in any of the profits. And that's important for them to know as it relates to your earnings. You know, so if I am going into business with my spouse, for example, and we're doing equal work in the business and we're going to split the profits 50-50, then I'd want Social Security to know that so that when they look at my business, the business tax return, they know, oh, 50% of the net profit really is for Molly and 50% is for the spouse. So it's helpful for them to know if there's co-owners and what the division of profits will be. So Social Security could ask for some additional information, like what's the address of the business, what's the phone number of the business, but really those are some of the core details that I just suggest you be prepared to share. So how do you report this information? There's no specific form. They don't have like a self-employment form that you fill out that says, I'm new to being self-employed and here's some initial information. Instead, you've got a couple ways you could do this initial report. You can call Social Security, either the national toll-free number or the local office, and communicate. I've opened a business, and here's some details about it. And you could also go to your local office and communicate in person what's going on. That's another option you could do. And lastly, another option you could do is you could write out the specific details of your business description on this form. It's the SSA form 795, which is really just like an official blank piece of paper. The best way I can describe it. Literally, it's just like a blank piece of paper and a place for the person to sign that says, this is the information I'm giving you. Has a place for the person to put their claim number and the date as well. So you could put the description of the business information on there. That's another option. Most people call or go into their local office, depending on where they live in proximity to the local Social Security office and how busy the local office is. Now, I realize that this, communicating a description of the business is pretty straightforward, but I do want to just pause and check in and see if there are any questions in the chat box. Sarah, has anything come in that I should tackle?
Hey there, this is Sarah speaking. So Molly, we do have a couple of questions.
Okay.
And then I do just want to share that all questions are welcome, but if there is a little bit more of a individualized answer or conversation that needs to happen, please reach out to us and we can go ahead and get that more private conversation happening outside of the webinar. But yeah, let's go ahead with the first question. Do we still have to send tax returns even if we don't make anything for the year?
That's a great question. I would recommend doing that. And I would. And in part, I would recommend doing that because it's your way of documenting the amount of self-employment activity you are or are not doing. If your local office tells you don't do that, then you don't need to do that. But by default, it's good to do. I would recommend it.
Thank you.
Yeah.
Another question we've got that I think relates to an older slide is, what does it mean receiving SSDI date of disability?
What does it mean receiving SSDI? I think what that might be referring to was a slide that was talking about when Medicare begins. And so when you're found eligible for SSDI, there's an SSDI entitlement date. And the entitlement date is the official date the SSDI starts. Sometimes it can take a little bit for the payments to start coming from Social Security, but the official start date for an SSDI benefit is called an entitlement date. And Medicare will start 24 months after that SSDI entitlement date. I think that may be what that was about.
This is Sierra speaking again. Do we have time for one more question, Molly?
Let's do one more question.
Okay. A question from Tiffany. What do you do if you haven't reported for a few years because you didn't know? Use the SSA form and explain it's been in operation for 2 years. What do you think?
That's a great question. Yeah, absolutely. I mean, what you're going to find in a few slides, what I'm going to share is that sometimes, especially with SSDI, they don't review your work right away. So it can take them a year or two before they review work anyway. But it is important to report. If you didn't know and now you do know, it's important to report. I would also suggest that that if you haven't hooked up with a benefit planner, to connect with a benefit planner and talk through your specific situation, so that you can kind of think through what the decision would like, what you can expect Social Security will do when you report. And So I think I answered that question essentially, like, it's okay, go ahead and report. Yeah, I mean, that is an important responsibility. So if you're just now finding out that you need to do that, that's okay. Just go ahead and do it. I would also suggest, I'll reiterate, that it would be great to talk with a benefit planner. And on that same note, I want to go back to something Sierra mentioned, which is that if anybody has a real is sort of personal situation and you're trying to figure out how this information applies to it, as I mentioned before, it can be hard to do that, right? The webinar setting isn't the greatest setting for doing that. Just a group setting isn't always great for that, but a webinar setting is even trickier for that. So we are going to share our information, our contact information with you. And please know you can reach out to us by email, and I'm happy to talk through your situation with you if that would be helpful. I'm happy to help you understand how this information applies to you. And what I'll probably do is also try to help you just for long-term support, figure out how you could get connected with a benefit planner in your area. Because I really want you to have the right support ongoing. But we can certainly talk through your situation if you'd like. Okay, I think that might be good for the moment, so I'm going to keep us going. Great questions, keep them coming. All right, so we talked about reporting the description of the business, and hey, I've started. This is what's going on. Now, I want to talk with you about this whole idea of reporting net earnings from self-employment. Now, initially, when you first open the business, you're going to be reporting projected net earnings from self-employment, just to give Social Security a sense of like, how much do you think you're going to be earning? Maybe it's a lot, maybe it's just a little, but just to give them a sense of what you're anticipating. But then also on an ongoing basis, you're going to eventually want to be reporting your actual net earnings from self-employment to Social Security. So for the sake of both of those topics, which I'm going to touch on, first, I want to make sure you know what net earnings from self-employment are. Let's get grounded on that first, and then we'll talk about projecting. Okay, so net earnings from self-employment, which we pronounce it by its acronym, NESE. So NESE is a person's self-employed earnings. It's basically the person's earnings when they're self-employed. And there's really two steps to calculating what NESE is for a person. I'm just going to walk you through these two steps so you feel like you have a sense of what this is. The first step is taking the business revenue, which is really the sales from the business, and subtracting the business expenses, which is really all the things the business has to pay out to make those sales happen. What's left is called net profit. So let's say, for example, we'll go back to Jana, that Jana in her graphic design business, last month, she brought in $2,500 in sales from all of the billable work she did. And she spent $1,000 on business expenses, and could be software and maybe some marketing, maybe her business insurance or licensing fees. So for step one, we would take that $2,500 of business revenue, we would subtract $1,000 of business expenses, and we end up with $1,500 of net profit. So Jana has $1,500 of net profit in this particular month. The second and the final step in calculating NESE is to take that net profit and multiply it by 0.9235. And that little deduction, that 0.9235 deduction, really just accounts for the fact that a self-employed person pays more in Social Security taxes than someone who's wage employed. So after we apply that 0.9235 deduction, we find in Jana's case that she has $1,385 in net earnings from self-employment. That's her NESE for the month. Now for the SSDI program, Social Security really needs the monthly NESE amount so that they can figure out if a person's used a trial work period month, and they can figure out after trial work period if a person's work is above or below substantial gainful activity. One of the webinars I mentioned that we did earlier this year is a webinar that's about NESE and SSDI, essentially what the effect of NESE is on SSDI. And in that, I explained all the work rules for SSDI. So I want to briefly give you a quick little recap so you understand why this monthly NESE is important. So when it comes to the SSDI work rules, there's really 3 phases. In the first phase, Social Security is given the person a trial work period, a period to try working and earn any amount and keep the benefit. It's a great phase. The trial work period comes to an end when the person has had 9 months where their earnings are above the trial work threshold, or if they're self-employed, if they've worked more than 80 hours a month in 9 months. So you have these period of time where you can work and earn anything, but to figure out when it's end, they're going to look to see if you've had NESE above the trial work threshold, which this year is $1,050 a month, or you've done more than 80 hours in your business. Once the trial work period's over, then they're going to look to see if the person's work is above or below the substantial gainful activity level. And they're looking at the monthly work. So this year, the SGA level is $1,470 a month. For someone who experiences blindness, it's $2,460 a month. So Social Security is going to look at a person's NESE when they're self-employed to see if they're above or below. In the second phase of work rules, if a person's NESE is above, they are not going to be due their benefit check in that month. The benefit isn't terminated, it's just paused. And if their NESE is below the SGA level, they're due the benefit check that month. So you can see knowing the monthly NESE amount is kind of a key detail for Social Security. They need to kind of figure out what that is when you're self-employed, what the monthly amount is. I'll just briefly say after that second phase, the third phase of work rules, they continue to check to see if earnings are above or below that SGA level. If earnings are below, the person continues to receive the SSDI, and if earnings go above, it can cause the SSDI benefit, the claim to close, the benefit to stop, and it would require a type of reapplication to get it back. So again, we have a webinar that goes into all sorts of details about that. I mean, I just gave you a 2-minute summary, which doesn't do it justice to those SSDI work rules. So Sierra, if you wouldn't mind popping a chat into the chat box, popping a link to that particular webinar, that would be great. If people are not familiar with those SSDI work rules and you receive SSDI, please check that webinar out. For the sake of our time together today, what I want you to get is that Social Security, when you're reporting, is going to want to eventually know what your monthly NESE is. It's your annual isn't as important, it's the monthly that's more key for them. So when it comes to reporting, you'll be reporting initially what you're projecting your NESE to be, and ideally you can give a projection of what you expect monthly. And then we'll get to in a few slides, once your business is open, you'll eventually report what your actual NESE is each month, if you can. Is there anything else? Let me see. I guess the only thing I would say about NESE before we move on is, in some cases, you might not have the monthly actual. If that's something like, I think somebody mentioned, may have been Tiffany mentioned, she's been in business for a while and is just now reporting. You know, if you didn't keep the monthly actuals, Social Security will probably just average it over however many months you were in business over the year. And they'll even average it if, another situation they may average it is if if you're in the kind of work where you work for several months and then you get paid, you get your self-employment, you invoice and you get money for the work you did. You work for several months and you get a chunk of money. Like, let's say, for example, let's say Jana, as our graphic designer, let's say she picked up a gig and she was designing a whole set of brochures and marketing materials. And it took her 3 months to develop all of them. She didn't get paid till she had them all done. So she had 3 months of work, and then suddenly she got paid $5,000. Well, that $5,000 was really for 3 months of work, right? It was revenue for 3 months. So if that happens with a person's business, if that's kind of the nature of how their business works, Social Security would probably average the annual NESE over however many months the person's in business. So averaging can happen. Whether it's averaging or they're looking at the actual NESE, that's something you'd want to talk through with Social Security when it comes time for them to do a review on your work. And you can kind of talk through what makes the most sense with your kind of business. Either way, they've got to come up with a monthly NESE amount to do what they need to do. Okay, let me check in about just the logistics of reporting your projections. Actually, no, I'm going to pause. Sierra, let me just check in if there's any question about NESE.
Hey there.
Just the concept. Yeah.
Yeah. So someone just asked, are you supposed to report NESE monthly?
Yeah. So that question is really about the ongoing reporting. So I'm going to hold that and I'm going to come back to that question. Essentially, with SSDI, you are not reporting every month what's happening. You want to keep a record of your monthly NESE, but you're not like every month telling Social Security what it is. And that will become hopefully a little bit clearer when we talk about when we get to the ongoing reporting slides. Right now, I just want to make sure everybody feels clear about this whole concept of NESE.
This is Sierra speaking. I think we can hold off on the questions until we turn it up for more general.
Okay, that sounds great. Okay, perfect. So you get this concept of NESE. Ideally, that's feeling clear. So now I want to talk with you about reporting the projection. This is, again, when you initially open the business. Okay, so here you are. You're just, let's just pretend it's the first month of Jana's business, and she's just opening up and she's starting to do her marketing, and she's planning on bringing in, let's say she's planning on, I'm going to use the projection from before, but $1,385 of NESE every month. Let's say that's her projection, which is the numbers I showed you on the previous slide. So when she contacts Social Security, she would say, hey, I'm opening this business and this is what it is. This is the name of it. And this is what the business is going to do. And I don't really know how it's going to all shake out. I'm not positive, but I am hoping that I'm going to end up with $1,385 of NESE each month, kind of an average. So what's true is Social Security, when they get that information, what they'll do is they'll put a flag in their system that says, okay, it's good to know. We are going to make a point of doing a review on your work activity the beginning of next year once you've got your business tax return done. In other words, they're generally not going to do a review of Jana's work right then and there, because all she has is an estimate. All she has is a projection. We don't really know what's going to happen, right? Things could go great, things might not go great. So Social Security doesn't want to review her work right now because they don't even really know what it's going to be. So generally, they wait and they say, okay, well, we're going to review your work in the beginning of next year after you've done your business tax return. Then we know for sure what your actual earnings ended up being in that previous year. So for somebody like in Jana's case, who's projecting to have net earnings from self-employment that's below SGA, and she's expecting that she still do her SSDI benefit, this system works pretty well, right? She's continuing to receive her SSDI like she expects. And in theory, in the beginning of next year, when she submits her tax return, Social Security finds, lo and behold, yes, her NESE was about that amount and she still do her SSDI. Where this whole system doesn't work as great is if somebody is projecting to have really high NESE, where they're projecting to have $3,000 a month, so much that they're really expecting that their SSDI should be stopped. And if that happens, then a person, they might need to advocate with Social Security to voluntarily suspend their benefits. So rather than having Social Security wait to do the work review in the beginning of the following year when they have the tax return. Now, generally, a person shouldn't do that, shouldn't ask to have their benefits suspended just based on what they project, because the business may not end up doing as great as projected. Really, what's best is just for the person to do several months of work in the business, and every month keep a good record of what their income from the business is, their revenue and their expenses, and see what their net earnings from self-employment is every month, and compare that to SGA and say, do I think I'm still due? Do I still think I'm due the benefit? And essentially stay kind of a step ahead of what Social Security will be deciding. And if a person looks like they've had several months where they've had actual NESE after they start the business, where they've had actual NESE that's above the SGA amount, then it could be worth going to Social Security and saying, you know, I projected this was going to happen, and it did actually happen. And I don't want to end up with an overpayment. I would rather you voluntarily suspend my benefit. And that's something that they don't do lightly at Social Security. It can take some advocacy. So some people will instead just set aside that SSDI benefit, knowing when Social Security does the work review after the tax return's done, they'll pay that benefit, those benefit payments back. I think the key thing I would say about this projecting piece is that if you're someone who's projecting to have net earnings from self-employment that's above the SGA, I highly, highly, highly recommend you get connected with a benefit planner just to help you plan out your steps to create a plan. If you're planning to you anticipate having net earnings from self-employment that's below SGA, it's not, in theory, going to change anything about your benefit, right? You're going to report when you first open your business, you're going to tell them what you think it is. They're not going to do a work review. They want to wait till you have the business tax return done. So you just make sure to turn in your business tax return, and then they would use that information along with some additional details to review your work and confirm, yeah, your work was below SGA. And then that just confirms you were due the SSDI. And then you repeat that year after year. It's when you're going to have earnings that are above SGA, your NESE is going to be above SGA. That's when I highly recommend working with a benefit planner. It gets a little bit more complicated. Okay. That's projecting. I'm going to pause again, check in for questions. Sierra?
Hey, Molly, this is Sierra speaking. So we actually have quite a few questions.
Great.
Let's start going through them. The first one is from Sandra, and it asks, why is it important to report projections before actual monthly earnings to SSA?
Yeah, you know, what I would say is it's just good to give them a sense of what's happening. And part of it is it helps them decide when they likely will review your work. So if you're someone who is projected that any SE is going to be $200 a month, it's really low. They might even say, you know what, we're not going to, they might not even want to, they may push off when they do your work review. And if your NESE is expected to be like Jana's 1,385, they may decide, they'll say, well, we definitely want to do a work review when you have your tax return done. So it's mostly for them to make some decisions on their end about work reviews. And I would also say the projections are really important for you to do as well, so that you have a sense of whether you're on track with where you are going with your business or not. So.
Perfect, thank you.
Yeah.
The next question is related to an older slide, but does this change if the business is structured in different ways? Say I found a business that I draw a set salary from, instead of using the money as earnings, would they count both the net earnings of the business and my salary?
Great question. Yeah, so that's a great question. And the answer is yes, there is some difference. So when the vast majority, statistically, the vast majority of small businesses do not draw salary, do not set themselves up that way, especially single owner businesses, just because there's a layer of complexity when you set yourself up as an employee. But which is why this doesn't even go into that. But essentially, if you set yourself up as an employee of the business, literally you are set up with generally you would have a payroll system or a payroll service, and you're taking a paycheck from that payroll service, and IRS 941 returns are being submitted and 940 returns. If you're doing all that, then Social Security is generally going to count the wages you take as wage employment. They get a little confused by this arrangement when you take a salary. And so they may also send you an 820. They may not. I've seen it go both ways, but they may also send you, I'm so sorry. They may also send you a work activity report and ask you to report what your net profits are as well. And if your net profits could arguably have a reflection on your work in any way, then they could count your net profits as a part of your earnings potentially. So for example, in Jana's case, if she took a salary and she only took a salary of $200 a month, and the rest of it carried over as profit, Social Security would say, well, all of the profit is based on your work. And so even though you're not taking it as a salary, it does still reflect your earnings, so they could still count it. So if you're someone who's taking a salary, I would also suggest talking with a benefit planner just about your situation, so you feel like you have a good understanding of it. But generally, they're going to count your wage, the salary that you take from the business, as wage employment. Yeah, so hopefully that helps.
Great. I've got one more question for you.
Okay.
Do they view owning a business as the ability to work, especially long-time disabled business owners?
No, just the fact that you own a business, that alone isn't something where they would say, oh, you own a business, therefore you no longer meet Social Security's definition of disability. There's no rule that allows them to jump to that decision like that. Instead, they do these work reviews and they look at your work activity as it relates to what you're doing in the business, how much you're earning, and how much you're working in the business. So just the very fact of owning a business, that alone would not make them say, oh, you no longer have a disability. It's more in the details that they look at. And on that note, I'm going to get us moving on to some more details of the actual, because that's kind of where that question was going, right? If I own a business, what does this mean? So I'm going to move us on, in part because of time. This next slide I'm going to take us to is shifting us to sort of the ongoing reporting activities. So this one's pretty straightforward for the sake of ongoing reporting activities. When you're self-employed, you would do a business tax return, and that business tax return is something that you need to submit to Social Security. That's what they rely on to figure out what your actual earnings are. So the business tax return might be a Schedule C or a Schedule SE, could also be one that you use. There's a variety of them. There's if you're in a partnership, I think it's Form 1065. There's a number of different, depends on the business structure you have, the specific form you use will differ a little bit. Sole proprietors, for the most part, are using a Schedule C or a Schedule SE. So you don't need to give your whole personal tax return, like your 1040, you don't need to give that to Social Security. It's the business tax return that they need. They need to know what your final net earnings were from your business. Now, the way you do that, generally, you would be reporting that by giving it to the local office. Usually you're bringing it into the local office. If you have a good relationship with the local office and you can mail it in and you're not concerned it's going to get lost, like who to mail it to, you could mail it in. But generally, that's something that you're giving to the local office. Yeah, so that's the business tax return. That one's pretty straightforward. So I'm going to move us on to the next slide, which has way more detail to it and a little bit deeper thinking. And then we can check in about both. So I've mentioned this particular concept a couple times now, this idea of a work review. So in the world of the SSDI benefit, when you work, Social Security doesn't look at your work activity every month and decide what happens to your benefit each and every month. Does not work that way. Instead, with the SSDI benefit, what happens is you report when you start working. This is true of wage or self-employment. And then they will set a flag in their system a couple months out, 6 months, 9 months, a year, kind of depends on your situation. But they'll set a flag in their system to do what they call a work review. What happens is they need to wait a period of time because they only look at work that has been done, that's passed, that's occurred, previous work. So they aren't looking at your work each and every month. They wait a period of time and then they review the work that's been done in the past. When you're self-employed, as I mentioned, you first report that you're working, you've opened this business. They're going to want to wait and do a work review when you've submitted your business tax return, because that's when they have verified earnings, your final earnings. So when you submit that tax return, that usually sets off the reminder in their system to send you paperwork to do a work review. Now, the work review is Social Security's way of figuring out which phase of work rules you're in, and based on how much you're earning, whether you've used up trial work months or not, if you're beyond the trial work period, if your earnings are above or below SGA. So they use this work review to figure out what phase you're in and if you're due your SSDI or not, based on your work activity, based on those 3 phases of work rules and where you are in them. Now, to do this work review, Social Security will need a couple things. They'll need that business tax return. I've established that with you, right? Said that a couple times. They're also going to send one of their forms, which is this SSA form 820, which is the self-employment tax return, or I'm sorry, oh my gosh, the self-employment work report. And Sierra, if you wouldn't mind dropping a link to that SSA 820 into the chat in case people want to see what it looks like, that would be great. On that SSA 820, it's really a place for the person to share sort of not only some basics about the business, which they would have already reported, but some additional details, like are they getting extra help, any help running the business, any unpaid help running the business? Do they have any impairment-related work expenses? They'll ask how many hours the person's been working in the business, and they'll also ask for those actual monthly net earnings from self-employment. They're hoping that they can get those details. If they can't, remember, they're going to average most likely. So that means when it comes to completing this work review, ideally what's happened since you started the business, ideally what's happening is you're keeping good records of actual monthly income, business income, and expenses. And ideally, you're also keeping a little note somewhere for yourself of how many hours you're working in the business, how much work you're doing. So that when it comes time to do that work review, when they send that form, you ideally have all your records set up and ready to go for the sake of filling out that form. Once you submit all that information, Social Security will look at it and they'll say, okay, let's see, what were Molly's net earnings from self-employment? And is she doing SGA level work or not, assuming she's done with the trial work period? And what does that mean for her benefit as it relates to the regular old SSDI work rules? And I know that piece is probably a lot. I've referred to it several times, so I just want to check in and see if folks have questions about that work review process. And Sierra, while you're checking the chat, I do also want to clarify that when Social Security does this work review process, it's not a disability review. So they're not asking about medical improvement or what's happening with the person's disability. It is purely about the work that's been performed and earnings that have happened. Okay, so on that.
Speaking, I think we can go ahead and save the questions.
Great.
Later, so we can keep moving forward.
Okay, perfect. Great, great, great. So really the last ongoing activity around reporting for SSDI, I actually just kind of mentioned and alluded to, and that is it's super important to monitor and track what's happening with your monthly net earnings from self-employment. And that I like to suggest doing that because I feel like it's good just to be a step ahead of Social Security. I mean, because they're always reviewing a period of work done in the past, it's really ideal if you're someone receiving benefits, if you're familiar with the rules and you can be every month looking to see what was my net earnings from self-employment this month, how did that compare to sort of what I had projected, and more importantly, as it relates to SSDI, is it above or below SGA? Where am I sitting with my benefit? If as you're tracking this every month, you've got a good record keeping system and you're tracking your business revenue and expenses and you're looking at it every month, if you find that business is booming and you are suddenly like knocking it out of the ballpark and your net earnings from self-employment are way higher than expected, you might find that you need to go back to Social Security and say, holy smokes, things are going really great here. And I know you're not scheduled to do another work review on me for 6 months or however long it is, but I don't think I think I've hit the point where I'm earning so much I'm going to end up owing SSDI back, and can you voluntarily suspend it? That again is something they don't do lightly. So as an alternative, you can also simply set aside that SSDI, knowing that you think you're not going to be due that benefit that month. And so you'll set it aside, knowing that eventually they're going to do the work review and they're going to want it. Again, anybody who's finding that they are going to be, or they are earning above SGA, I highly recommend connecting with a benefit planner to talk through your individual situation. Last thing I will say about monitoring is, to succeed in doing this, you really have to have a good bookkeeping system. And really, anybody in business, anybody who's self-employed needs a good bookkeeping system. But what that looks like is going to be very different from one person to another. So it's not like, you have to use one particular kind of bookkeeping system. It's not like that at all. Just find something that works for you. So if you have a really simple business, like Jana's business is really simple. She's just providing a service. She's working out of home. She might just be keeping track of her business income and expenses on an Excel spreadsheet or in a notebook. Someone who has a more complex business, maybe, if I have a food truck or a coffee shop. In that case, likely you're going to have either bookkeeping software, or you may even have a bookkeeper that you pay to help you manage the books. Everybody's situation is so unique and different. I just want to stress the importance when you go into self-employment of figuring out the system that's going to work for you, given you and your business, and get that set up so that you have a good set of books. You've got good, solid financial records that you need not only for Social Security purposes, but also for reporting your business for IRS purposes, and potentially with your state or local government agencies. There may also be some self-employment reporting you need to do there. All right, so those are the key things about reporting. Just some final tips I would say is it's helpful to take a little bit of time and create some projections around what you expect for net earnings from self-employment, mostly for yourself, so you have a sense of what you foresee happening and how that might or might not affect your benefit. Incredibly important to create a record. Keep records of actual business revenue, business expenses, and also hours worked in the business. And that doesn't need to be anything fancy. That could simply be, this week, make a note somewhere. You have somewhere every week you make a note of, like, worked 5 hours in the business, worked 10 hours in the business, worked 8 hours in the business, worked 30, whatever it is. I also highly recommend every month, if not at least once a quarter, taking a look at what your actual net earnings from self-employment are and comparing them to the SGA level to see where you're at. And that is so that you can be a step ahead of Social Security. Because remember, they're not looking at your work every month and making a decision about what's happening with your benefit every month. They go for a whole period of time, and then they look back and see what happened. So it's ideal if you can just kind of stay a step ahead of them and see what your earnings are compared to that SGA. Each year, do that business tax return. Super, super, super important for multiple reasons. But you'll need to submit that to Social Security. And then, of course, when Social Security determines that it makes sense to do a work review, they'll send that SSA form 820. Just make sure to fill that out with all the details that you've ideally been recording along the way, and reach out to a benefit planner. If you have any questions or concerns, if you need any help in kind of understanding how to do this reporting part of the process, and you want some individual one-on-one help, benefit planners can be helpful for that. Okay, Sierra, what do you got for final questions?
All right, this is Sierra speaking. So Sandra asked, say a person is in the Ticket to Work program.
Yeah.
Their monthly net earnings is over the monthly threshold under the trial work period or extended period of eligibility. Do they suspend benefit checks for retroactive information after the year the beneficiary submitted their earnings?
So the fact that the person's in the Ticket to Work program, when it comes to the work rules, it doesn't matter, is irrelevant. So just sort of let that part go. And in terms of suspending the benefit, what Social Security does, they're always looking with SSDI, they're always looking back, right? They're looking back at however, maybe it's a month, or I'm sorry, maybe it's 6 months, maybe it's a year, maybe it's 2 years, maybe it's 5 years. When they look back, sort of imagine that they kind of like run down to the beginning of that period. And then from the start of that period that they're reviewing, they compare it to see, is this trial work month? Have they used trial work months? If so, then yep, those are counted as trial work months. And then after the trial work's over, they check to see, oh, has this person moved into phase 2? And so they just apply all the work rules back to, as the work rules are based on the work rules. I'm sorry if I'm answering that question very well, but I guess in essence, yes, they do use it retroactively.
Next question is about impairment-related work expenses.
Yeah.
Can these reduce your earnings when you are self-employed?
Yes, they can. Impairment-related work expenses do reduce countable earnings. They can potentially reduce countable net earnings from self-employment below SGA. Just keep in mind that an expense that was claimed as a business expense cannot also be an IRWI. So it's really, those are just going to be impairment-related expenses that are they're not business deductions. So co-pays for doctor's appointments or prescriptions would be examples of what could be IRWIs. And Sierra, let's take one more, and then I think we might be out of time. I might need to tackle the rest via email.
Okay. Last one is, can you use back years loss in your business to pay back, showing you are paying back so you aren't showing a profit yet, if you're showing it on your records?
Could you say it one more time? Can you use years?
Can you use back years? Oh, I'm not sure. Nicole,
It's like asked that correctly. It was like if you've like shown loss, like you have loss and you're like showing that for like 5 years, I paid out this much, and now I'm starting. Let's say you paid out $500, and
I
then
understand.
you've now made $500, but that was like 2 years ago, and now you're paying your account back, but you're not making a profit because you just paid your account back. Does that make sense?
So what I would say is, when it comes to net earnings from self-employment, which is what you're asking about and how that's calculated, it's really based on the IRS rules. So however it shakes out for IRS rules in terms of your net profit, that's what they're going to go by. So in some cases, if you've had a loss, you can depreciate that over future years. But I am not an accountant, so I can't answer that question. I would just say the default, it always comes back to how the IRS would be calculating your net profit. And then that's basically the foundation for what your NESE is.